Welcome, dear traders. You're watching a recap of the Asian session on September 12. Tech stocks are the main driver of stock markets. Notably, Nvidia, Meta, Apple and Tesla are the very driving forces that affect the major indexes. Let's take a look at how the US dollar and its counterparts behave in such an environment in our view. Of course, even the shares of the so-called Magnificent Seven do not usually rise on their own, but in response to incoming news. At the same time, Morgan Stanley analysts raise Tesla's rating. Apple prepares to release the iPhone 15, and Meta develops a new artificial intelligence product. One could say that it's a coincidence. However, the rapid development of the tech sector worldwide has become a pattern. That's why Wall Street went up yesterday, pulling up similar companies in the Asian region. However, there was not enough optimism for the antibody in stock markets, and they spent the session in a more neutral range. Conflicting domestic data also played their part. Australia, for example, reported a decline in consumer sentiment in September. On the other hand, today's business confidence index doubled to 2 points from 1. The US inflation report will be even more important for global markets. Low figures may put pressure on the greenback, while higher inflation could weaken risky assets. However, this data will be released tomorrow. Therefore, today's movement of the US dollar in Asia initially resembled a consolidation within a narrow range of 104.50 and 104.80. The greenback posted slight growth thanks to the Wall Street Journal, and yesterday the media reported that the US Federal Reserve was opposed in its tightening cycle at its next meeting on September 20. On the other hand, some policymakers are in favor of a rate hike now, so that there can be a gradual reduction later. With such conflicting trends, investors' appetite for riskier assets is waning, and markets turn to the US dollar. The currency rose to 104.70 against its G6 counterparts in Asian trading and continued to rise moderately. And the Chinese Yuan also took a breather from the median news today. It traded fairly steady in the Asian trade after a sharp rise in the previous session. According to Reuters, Beijing has tightened control over massive US dollar purchases by domestic companies. Amid some signs of economic recovery in China, the country's currency is still facing increasing depreciation pressure. Chinese authorities are expected to try to keep the yuan exchange rate stable until the Golden Week holiday, which begins on September 29. China also urgently needs to restore confidence in the country's economy. For example, investors were comforted by the news that Country Garden, the country's largest private real estate developer, received approval from creditors to extend bond repayments by 3 years. Nevertheless, the measures taken do not look like a complete cure for China's real estate sector. Thus, this contagious disease may emerge at any moment. On a Tuesday, the yuan failed to gain ground on the back of the weaker US dollar and the Bank of Japan's optimistic comments about the country's currency. In early Tuesday trading, the Japanese currency gradually declined against the greenback within the range of 146.40 and 145.00. As a result, the dollar-yuan pair closed the Asian session rising to 146.80. Last weekend, Katsuo Ueda said that the regulator may refrain from its negative interest rate policy, and it seems that markets do not believe that the Bank of Japan's policy reversal may happen in the near future, especially after the governor noted that reaching the 2% inflation target was among the main conditions for the reversal. According to reports, Japan's inflation was standing at 3.3% in July. A fresh batch of data will be released on September 21, after the Fed's decision on the key interest rate on September 20. In the meantime, the US dollar is expected to remain strong. The greenback may also receive support from a strong US economic data if the Japanese yen is still waiting for support from the economic statistics. The Australian dollar has already been supported by the policy of the Reserve Bank of Australia. Currently, the Aussie's movement depends entirely on external factors: China, Wall Street and the greenback. And today it seems that the last two were the most important: the stronger US dollar and falling risk sentiment. As a result, the Aussie dollar pair showed high volatility today, moving down within the range of 0.6416 and 0.6442. The Australian currency closed Tuesday's Asian session in the bearish territory of 0.6425. In the Asian session, the New Zealand dollar also slid. The currency was down from yesterday's high of 0.5934, which was reached on news of an improvement in China's bank lending situation. Increased demand in the Chinese market is expected to boost optimism among New Zealand's manufacturers. In addition, tourist arrivals to New Zealand rose by nearly 60% in August. Compared to the same period last year, tourism in New Zealand is an important sector of the national economy. Meanwhile, stubborn inflation is still above 6%, and this may force the Reserve Bank of New Zealand to raise interest rates. Against this backdrop, the New Zealand dollar has a chance to grow in the coming days. In early Tuesday trading, the Kiwi fell within the range of 0.5900 and 0.5927 and closed the Asian session at 0.5905. And that's all for now. Leave your comments down below and don't miss our next video review. Remember that staying up to date is the key to success in your trading, and see you online soon.